Hello, so I'm going to give you guys an update this week. As you know, the market is shifting pretty quickly in real estate anyways, due to the pandemic. There's just been a lot of moving pieces, and I think just like everyone else, lenders are trying to navigate the situation as best they can, which results in a lot of rash decisions and big changes happening. So as of now, just like my update from last week, basically a lot of lenders are increasing debt coverage ratios. They are reducing their max LTVs. A lot of lenders are continuing to limit cash out. Now lenders are requiring, depending on the lender, 6 to 12 months worth of payments in a bank account with them. Some lenders are allowing that account to be used for the monthly payments. Most of them are not. So you'll need to make your monthly payments outside of the funds that are held in that account, but they will need to be held with them typically for 12 months is what most lenders are requiring. We are continuing to see lenders restrict lending or even just get out of lending altogether for the moment. So it's definitely causing somewhat of a credit crunch, if you will. Some of our lenders, if you've got files in process with them, they might say, you know, hey, we're just not going to move forward with this transaction or any transaction right now. So we are seeing that across the board with many lenders, and basically they're just fearful. They've gotten a lot of phone calls with borrowers not being able to pay their rents. That being said, April collections really weren't that bad. We own multifamily. We collected on about 96.5% of our rents, which is huge. And then across the country, it looks like most people collected about 84% of their rent. So April 5th, it was like 78%, but now as of April 15th, most people have collected about 84% of the rents, which is not that much lower than the industry average, not in the pandemic. So overall, collections for April were super good, but lenders are still continuing to get more conservative. So my suggestion to you, if you need to do financing right now, whether it's that you want to get cash for your rainy day fund, you want to get cash to be prepared for, you know, the market once it turns around, you're purchasing a property, whatever the case may be, if you need to do financing now, you need to be prepared that you're going to pay higher rates. The lenders are going to be more conservative. You are going to have more reserves. If you've got some things in your credit or in your financials that aren't looking as good, it may be more of a challenge for you to get that financing. But for everyone, what I'm recommending is to go with financing that has little to no prepayment penalty. So that way you have flexibility when we come out of this thing and rates go back down. That's what we're thinking and predicting is going to happen. You want to be in a position to pay as little prepay as possible to get out of this loan and get into a much better interest rate and a more ideal program and, you know, financing structure that's best for your property. So those are my suggestions. Also, do watch out. We're going to be sending out some notifications. We're doing some interviews, just trying to keep everybody up to date. As of now, we have scheduled to do an interview with Kimball Tyree and St. John to talk about the legal side of things. I know people will have lots of questions, so you can submit those. We are having an interview with a large syndicator. We're going to be asking him questions on how he's handling his portfolio and what he's doing in all of this. And then we also have scheduled to talk with a very well-known CPA to ask questions on this whole situation and how owners and investors can be best prepared. So do look out for those updates and stay tuned.